Good afternoon from Commercial Rare Coins and Precious Metals in beautiful Lauderdale by the Sea. Beautiful day out again. I don't know what it is about this area, but it's always blue skies, sunny, and lovely days for the most part, unless we get those rainy days and those storms like everyone does. But for some reason, they seem to go right around me. So usually this little town, always beautiful blue skies. Well, let's talk about precious metals. What did we get today? What I've been talking about all week and for a little while now, pauses and pullbacks. Yesterday we had a big pullback. Today it is a pause, and I like this. This is healthy. We've been talking about this for a little while now. When silver just started to rocket past the 20s, and here I'm going to pull up the page here for world spot prices and New York spot prices. I'm sure most of you have already seen this, but when we started rocketing up into those 20s and we started just breaking through, a dollar a time, 25, 26, 27, 28, $29 an ounce. I'm thinking to myself, well, this is exciting. This is fun to watch. It's like a roller coaster. Watch my little thing, a roller coaster like this. But there was really nothing pulling back, no kind of pullback like this. So we kind of rocketed through those 20s, and then we had our pullback here, almost a $4 pullback from 29 into the 24s. However, really, the price that you're seeing is a COMEX price, or a price based on contracts and such, and futures markets, not really physical. All physical products are trading at least $1 or $2 or more over the current paper prices out there. So let's take a look at markets real quick here. Gold. Let's look at New York first. Gold closed at 1934.90 in New York. And what were our ranges? 1950, 1928. And of course, the monkey hammering that we saw yesterday took us from the 2000s down, almost $100 down day in gold. But hey, listen, good correction, overdue and big. And when gold makes corrections, it makes big corrections. And when silver makes corrections, it makes even larger corrections. Silver corrections are not for the faint-hearted. If you're a faint-hearted person and you panic every time you see a price drop, you should probably not own silver. However, if you love to make big profits, you probably should own silver. So it's kind of a little bit of both there. So let's take a look at, again, the range here, about a $25 range. And I like these $25 ranges when they start ticking up 25 instead of like going meteor like. I like that. That's great. And there's another thing too, is when you see big pullbacks like this and you see drops like this, again, that's healthy. If you see nothing but up, 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 constant ups with no really big pullbacks, it's healthy if you're making money on that, but at some point there's going to be a correction, there's going to be a big correction, and there's going to be a big pullback. So I like these corrections, and I think this is very healthy for the gold and silver markets. And we've been talking about this for weeks, actually, since these markets started going really fast or moving up fast. Excuse me. Let's take a look at silver in New York. $25.95, so about $26 on the close. Remember, we were as high as $29 earlier in the last week, and the beginning of this week before it got monkey hammered. But silver did get monkey hammered, but this is great again. It's kind of backed it off a little bit, and let's rebuild a base. And perhaps all those people that, or whatever caused the price of silver to go down, which I think was ETFs, was partially responsible. And those people aren't real silver buyers. They just buy paper. It probably had caused the price to drop somewhat. And that's pretty typical. Let's take a look at the range in silver. 25.10 low, 20. Wow, I mean that's like a $1.10 range there in New York today. A low at 25.10, a high at 26.21, and we're kind of settled in between there. Overall, up from the lows. I saw a tick below 25. I forget how low. Below 25. Oh, look here. Let's take a look at world markets. Here we can see how low it got. 23.53. Now, how is that for a pullback? And remember, I've been talking about these pullbacks. I was saying if you can trade on them, you can catch them in time, great. But they usually happen early in the morning or during low trading frequency when everyone's sleeping. And that's why I call it monkey hammering, because who the hell sells in these early morning markets before anyone gets up at 23.53? I mean, come on. Some kind of selling cause that. And look at this range, 26, 27. That's a $3 range on silver in the world market's crazy. And again, if you got a weak heart, you probably shouldn't be in silver. But like I said, when silver moves, it moves big, and it goes both ways. And I think this is a healthy correction. This is not a dump. So buy the dips. Absolutely buy the dips. And let's take a look at platinum here. Again, underpriced metal. I think silver should be closer to $50 an ounce. Platinum should be closer to $1,800 an ounce. And gold is just going to do what it does. And I believe we're going to see $2,500 plus prices. Ask me when. That's the real secret. If I knew exactly when, I'd be rich. And then after I got rich, I would tell you the next when that I knew. But meanwhile, I don't know when. Timing is everything. But we are going to see higher gold prices. I'm certain we're going to see $2,500 gold. I don't think it's too far away either. I'm pretty certain we're going to see silver hit its all-time high again of $50. And really, it should go beyond that if all the monkey hammering and the manipulation in those markets is pretty much done with. And the markets will straighten out themselves at some point. They'll drive these manipulators right out at some point, you would think. So again, look at these ranges, pretty crazy. And as I said, I like what I see happening today. We had a low at 23.53. We're back up to around 26, $26 an ounce. And what we're seeing right now is a pause, and a pause is good. A pause is healthy for this market. Let's go over here. I saw this article earlier, and I thought it was great. Gold at 2,000K. So why the fuss? And this is basically talking about the technical end of what's happening in the gold and silver market. There appears to be no way out for the bullion banks deteriorating $53 billion short gold futures position. Wow, $38 billion net on counters. An early attempt between January and March to regain control of the paper gold markets has backfired on the bullion banks. A very powerful article. If you get a chance, it's Gold Money Insights by Al. Here, take a look right here. Read the rest of the article because I can't read you the whole thing by Alasdair MacLeod. And pretty much spot on target. This is what I've been talking about when physical gold and silver has been trading for more than like the paper prices you see on your spot prices or what an ETF trades for. And that's because an ETF and COMEX are not real gold for the most part. COMEX actually is over leveraged in my opinion, and ETFs are really 100 to 1. They probably own a tenth of an ounce of silver, or 100 people own 1 ounce of silver, I should say. So, and these are what I call unallocated gold accounts. And they're talking about unallocated gold accounts with member banks will shortly discover that the market is trading on vapor. Well, we've known this for some time. This is nothing new. But again, he points this out clearly, and again, he knows this. According to the bank for BIS, at the end of last year, LNBA gold positions, the vast majority being allocated to $512 billion in unallocated gold accounts. You know what an unallocated account is? It's an ETF. And more or less, it means that if you own an ETF, you own really nothing but a piece of paper. So SLV, in my opinion, is nothing more than a piece of paper that's over leveraged. So it looks like that it's possible that the LNBA and member banks will be in trouble here soon. You know what? The nice thing about having physical gold, even though it's costing you $1 or $2 more per ounce than what a ETF would cost, you could buy an ETF for, or a contract, you have very little third-party risk once you have that gold and silver in your hand. ETFs, you have major third-party risk. They go down, you have nothing. COMEX goes down, you have nothing. LNBA goes down, you have nothing. At least with the physical metal in your hand, you limit this third-party risk that is so prevalent in this world, and probably going to be more prevalent in a more dangerous world. So why would you risk giving your gold or silver and letting someone else hold it, or presumably hold it, or pretend that they hold it, like an ETF does, in my opinion? So sorry about that. Didn't mean to go off on ETFs, but I think they suck. I think they're very dangerous, or could be dangerous. So What he says here, an awful lot of gold bulls are going to be disappointed when their unallocated bullion bank turn, again, read ETFs and possibly other types of unallocated accounts, just go belly up. Not good, not good. Again, I can't tell you how important I think it is to actually have physical gold and silver in your hand. And again, you limit someone else going belly up with all your money. By the way, like I said, make sure you read this article, introduction. It goes into some really cool stuff. I think it's well written. I'm very impressed with it. I read the whole thing, and I think you should too. I'm going to highlight the top here. There you go. Type this in, Google it, gold at 2K, so why the fuss? And let me see, there's a link right there at goldmoney.com. Read the article. I think it's great and nails it. So let's take a look at the Wall Street Journal, because I always like to look and see if there's anything here. And again, I've been railing for the last week or so how the Wall Street Journal has not mentioned a effing word about gold or silver. Nothing. Precious metal rallies. What do we have here? Gold prices closed slightly higher after a wild trading session. Well, I'm actually impressed. First article I have seen on precious metals in a little while in the Wall Street Journal, especially on the front page. And let's see, did they slam it? No, I didn't have a chance to read this. I think this just popped up. I was about to go off on the Wall Street Journal again, and here they do a little article on gold. Adding to the choppiness in gold markets, novice investors sought to sell a metal the moment prices stumbled. And you know what? I think this gentleman, whoever Saxo Bank's head of commodity strategy, said, I think he kind of hit it, because a lot of the selling off in silver was online accounts. I think those Robinhood young folks who had sold off their SLV, who I just talked about that I don't trust. But anyways, let's see what he says. The sell-off, well, what have I been saying for a little while here? The sell-off. It was overdue, but probably now overextended. So hence the reason the big sell-off on silver. The fact that the correction was as deep as it has been was down to the fact that there have been a lot of new investors entering the market in the past few weeks. Well, those investors were mostly ETF people, and that's what caused the market to go down. Not anybody that was actually holding real gold or silver, because I'm on the front lines. I don't think anyone sold us gold and silver this week. I had nothing but buyers. But as far as the online and the paper gold and silver, yeah, ETFs. And again, like I said, I think the ETFs are dangerous. I think at some point they're going to have big problems. But I take a look at this article in the Wall Street Journal. Very interesting. Doesn't look like it's trashing it. And again, I was just about to go off on the Wall Street Journal for not having any articles on gold and silver. But interestingly enough, they don't talk about silver, who has been the real big gainer. So maybe I can go off on them a little bit. But hey, I give them credit for bringing up the gold article right here. Well, anyways, very interesting times. I think we are having a little pause right now, so it can't hurt even if you miss these dip. And I've been saying buy the dips in gold and silver, buy the dips in gold and silver and platinum if you can get it. Even if you don't buy the dips, buy the pauses. We're in a pause right now. I like this. So this is a good time to buy. Things have steadied out. And, could it go down a little bit more? Sure. But, again, we're in a bull market. I think we're continue to see higher prices. And let me move along here to my page. This is Brian Kuzmar at Commercial Rare Coins, 954-493-8811. Or if you want an easier phone number to remember in your head, maybe I'll sing it to you, 954-776-COIN. I didn't sing that, did I? But anyway, pretty easy to remember, 954-776-COIN. Call us anytime. Come on in, even better. If you come in, we can give you a little education on what buy or sell, or what we think the best products are at the time. We do all the gold, silver, platinum products, obviously. And I've been doing this since 1977. I've been in this building, you see this little building right here, since 1995. So come on in. We'll take care of whatever you need. And thanks for watching, and watch tomorrow. Let's see what happens.